estate boy. And today I'm going to bring you one of my series, real estate investing. This is for new real estate investors, okay? I mean, a lot of people out there that want to. Something up here was okay. Take that out. All right. I mean, a lot of people out there that want to start to invest in real estate, but they don't know how to get started. Okay. They're looking at bigger pockets, they're looking at podcasts, and they're looking at YouTube channels, and they want to get started in investing. Well, what I'm gonna do is for the next probably week, I'm gonna go actually really good book out there that's just a while ago, but it's for beginner investors. So book's called let's see what book is called. This book is called Game of Real Estate Investing. Okay. That's the or no, I'm sorry. The book is called The Beginner Real Estate Investors Playbook. That's what it's called. It's called The Beginner Real Estate Investors Playbook. So that's what we're going to be doing. Going through this, and I'll be giving my commentary on the things that I'm going to be talking about. Now, if you're finding LinkedIn or you're finding this on book or YouTube, you'll be actually able to see the text. If you're on TikTok or uh, Instagram, then you won't be able to. So sorry about that, but I'm just going to go through this, give you my commentary, but all in all, I'm going to teach you guys how to start investing. Okay. So let me share my screen here. Okay. I'm sharing my screen there. So the first is the basics. Okay. Just enough to get going. So the first thing that we're going to talk about is some of the because you really got to know some definitions in order to get started in investing. All right. So, what is real estate investing at its core? All right. That's the first thing. I know a lot of people they want to start they want to start right at the getting at the money. Okay, that's their first thing is that they want to start at getting at the money. But let's start with the basics, okay? What is real estate investing at its core? It says at its simplest form, real estate investing is when you buy a home and plan to make money from it. You invest in the house, and the house provides you with some return on your money. So, at the basis, at the very, very basic form, that's what real estate investing is you're buying a home and you're looking to make money from it. Now, there's two types of real estate investing, all right? And there are two overall, there's two types. One is fix and flip, all right? It says when you buy a home that needs work, you fix it up and then you sell it for a higher value. All right. Now we won't be going into that in this particular in these sessions. We're not going to be talking about flipping. All right. We're talking about buying and holding. We're not talking about flipping. And we're going to do this every day at 12 o'clock for the most part. All right. And we're going to do it until we get through this whole book. And at the end of the book, you should be ready to do your first investment. Okay. So it says people do this kind of investing, but it involves more risk. All right. It does involve more risk because you're buying a home, you're fixing it up, and then you're trying to sell it. All right. But we're not going to go into that. The second type of investing, of real estate investing, which we went to, is buying and holding. Now it says this is when you buy a property, you're running out intending to make monthly income that covers cost of running the property. So you are left over with cash at the end of the month. An example would be a home that rents for 1,500 a month. The cost of everything like the mortgage, the repairs add up to $1,200 a month, leaving you making $300 a month. All right. Everything in the playbook from here on out we'll be discussing in terms of buy and holding investing. So when we're talking this whole book or this whole playbook that we're going to be going over, this whole playbook is going to be talking about buying and holding. We're not talking about flipping, okay? When we say real estate investing, we're talking about buying and holding. And again, this is for beginners. This is for beginners. So there's four ways to make money through buy and hold investing. Again, there's four ways to make money through buying, hold investing. The first one is cash flow, and this is the difference between income and the expenses in the property. All right. In our last example, it was 300 bucks. So as a buy and hold investor and a beginner, this is the most important metric. Everything else we will talk about is just icing on the cake. So if the rent income you make covers all the expenses on your property, then you have a cash flowing property. You have monthly cash flow left over, and you could put that in your pocket. That's passive income. Now each home, um, it says each home you end up owning will have its own income stream or its own stream of income. All right. So remember, this is the most important metric when you're buying a home. What's the most important thing? The most important thing, not buying a home, when you're investing in real estate, the most important thing is that what? Is that you make money, cash flows. Okay. That's the most important thing. The second thing we're going to talk about also is appreciation. And this is simple. This is simply when an item's value increases over time. Appreciation in real estate is when a home's value increases over time. There are two types of appreciation. So appreciation is when you buy something and the price goes up. So you hold it and the price goes up. This is appreciation. Now there's two types of appreciation. There's natural appreciation and there's forced appreciation. Natural appreciation is when you buy something but the overall market goes up. All right? But you didn't do anything to the property, but it just naturally goes up over time. Okay. This is forced natural appreciation. So again, it says which depends on the local market, town or state, and doing and how the overall market is doing. If you are in an area where jobs are being created, it says there are low crimes, fun things to do, schools are good, then the home value will likely increase. If you're in an area that is not so good, the homes will not increase in as much. As you can see, this is not fully in your control, so we can't count on this as a buy and hold investor. This is more of an educated guess or a hypothesis. So with natural appreciation, it depends on what's happening in the area. Okay. Now, forced appreciation, it says, is when you fix something at a property and this increases the home's value. For example, in one of my units, okay, so he's talking about one of these units. So fixed forced appreciation is when you buy something and cause you fixed it up, now it's worth more. And this is for fixer uppers. Okay. So when you buy fixer uppers and then you fix it up, you force the appreciation to go up. All right. So when we're talking about appreciation, we're talking about two different types. We're talking about natural appreciation and we're talking about forced appreciation. Now, the other topic that we need to know as far as being a beginning real estate investor is leverage. All right. So remember the last time you invested in your 401k at your job, and how everyone tells you you should invest at least the minimum to meet your company's match. Well, in that case, a company is giving you money to invest because you work lots of hours for them. The banks will kind of do the same thing for you to buy real estate with a little fee. You will only need, it says here, 25% down plus closing costs, and we'll get into that later, of a home's value to buy the full asset. The bank will loan you the percent with a little interest. In real life, no one will give you 75% of something to buy it. They will likely laugh at you. This is called leverage. This allows you, okay. So, what he's talking about here is leverage. Now, real estate is one of the only um, investments where you can buy a portion of it and control the whole thing. That's leverage. All right. So with a house, for example, that's $100,000, you may only put down 3% or 5% or even 20%, but you'll be able to control 100% of the property. That's leverage. All right. So the next important topic is tax deductions. All right. Now this guy says that I'm not an accountant and I'm not an accountant either. Okay. So I won't be able to give you much details here, but real estate has a ton of tax. things like mortgage interest, transportation costs of traveling to and from the properties, having business dinners, things you fix on the property, and actual property items that depreciate in value over time. For example, you can depreciate the value of the home as it gets older and count that as a loss, which will mean you will pay less money to the government and put more in your pocket. So, for the most part, everybody kind of knows um, that real estate has tax deductions. So that's one of the benefits of being a real estate investor is that you can save on taxes because when you save on taxes, basically the government is your partner. The government is your partner. The government is saying, "Hey, we're going to partner with you on this, and we're not going to bang you up as heavy as we bang other people because the government knows that they're terrible landlords. So they want to partner with different individuals who do this all the time. All right. So they're going to reward you for being a real estate investor. All right. So this guy, the article says, I notice this a lot. So let's just summarize what you need to know. We are planning to buy and hold properties for a long time and have them produce some nice monthly paychecks from having people rent them out, aka cash flow. Our goal in the end is to have several properties, have them cover our bills, and put money in our pocket so we will be financially free. Focus. Let's conquer house number one first. In order to do that, we need to get a clear picture on what you want. Okay. Again, if you have any questions, you can reach out to me and shoot me a text. All right. So we'll go past that. But yes, it questions on this, you can definitely reach out to me. Okay. You can go to www.meetkhalid.com. All right. So part one is get clear and setting goals. What you will go for and what you won't go for. So we're gonna do this for about an hour, okay? We're gonna do this for about an So it says, congratulations, you know the basics. So we just went over the basics, okay? We went over what leverage was. We went over what cash flow. What else did we go over? We went over appreciation, okay? And we went over leverage. We went over cash flow, and we went over tax deductions, okay? So we kind of went over the basics, all right? So it says now the goal with this section is going to be to help you get clear on what you want and what strategy is what your strategy is going to be for real estate investing. All right. It says all the beginners that they have read some books or listened to a few podcasts. It also says when I ask them what's their strategy for real estate investing, they tell me something like, I want to invest in an up and coming town that can give me good cash flow, either the town near me or out of state, or looking at small multifamily and single families right now, which I might do the burst strategy or flip. So these are different things that people say. When I'm personally talking to people and they're looking to invest, and I ask them what their strategy is, they usually don't have one. They usually don't have a strategy. All right. So this guy says, I look at them confused because they just they just threw up every real estate term they knew at me. And that is an example of not being clear. Why does it matter if you're not entirely sure? Okay. So it says, when you call a real estate agent to start looking at properties, you will ooze the fact that you are a beginner and they will likely not take you serious. If they don't take you serious, you think they are going to let you know of properties that just came on the market, or are they going to go to the investors who are serious? So what they're talking about here is that when you go to real estate agents, and I'll be a victim of this, okay? I'm a real estate agent, and when people come to me and they say, "Well, I want to buy a home," and it's like, "Okay, what's your strategy?" They don't have a strategy. 9 times out of 10, they don't have a strategy, so I know that they're not serious, okay? So that continues. He says, on top of that, if you are not clear on what you want to do, you will spin around in circles. Always not being sure about what to go for. Okay, you will look at maybe doing flips or doing this strategy. Your focus is split and you get nothing done. All right. So we are going to hone in on what you want. And by the end of this chapter, you will create or you will foster a strategy so you are focused and clear on what you really want. So I was with you guys in real time. All right. I'm gonna do this with you in real time. So we are going to, matter of fact, let me take my pen out here. We are going to come up with a strategy, and you should do this too. Okay, you pull out a paper, a pen and paper, and you should definitely do this too. All right. So, what's your overarching strategy? All right. It says there are two types of real estate investing in general. We are going to start here. If you are reading this book, it's going to be buy and hold. All right. So his guy, if you can't see it, has fix and flip or buy and hold. And of course, if you're doing this real estate investment course with me, we're going to pick buy and hold. Okay. So it says when you buy a property, hold it for a period of years and rent it out. So you can make monthly income. All right. Sometimes my it says sometimes my computer's a little slow. It says write down either fix and flip or buy and hold, and then write why you want that one below. Okay, so buy and hold and why. The reason why is because I want cash flow. All right. So it says how will you buy it? The author says in this book is made for years with 9 to 5 job. Now, in real estate investing, there are a lot of ways to get the money for the property. All those options. So we are going to solely focus on mortgage options because with a job, you can highly qualify for a traditional mortgage. And that's true. Mortgages love jobs. So if you have a job, then the banks love jobs. That's what I should say. Okay, so it says here are your options. Circle the one that sounds most interesting for you. So they have traditional investment mortgage. And it says this is when you can buy a home. The bank will lend you 75 to 80% of the home's value, buy the home with 5% of the cost as part of the down payment. You don't need to live in the property, you can rent it out. So traditional investments mortgage, that's when you're buying a second home or you're buying an investment property. And most of the time you need to be putting down 20%. That's 20%. And then on top of that, closing costs. Okay. Hold on. Okay. The next is the FHA loan. Okay. And this is what I'm going to do. All right. So the FHA loan, this is when you buy a home with a government backed loan. You can buy it with as low as 3.5% for the payment. However, there's a catch. You must live in a property for a year. This really works well. You can get a small multi-family unit, live in one of the units and rent out the others so you can live for free. And this is what I'm okay. So I'm looking for a FHA loan because I want to buy a duplex, really a triplex or a duplex, and rent out one or two units and live the other. Okay. So now it says write down either traditional investment mortgage or FHA loan, and then write why you want that below. So I'm going to do a FHA, and the reason why is low down payment. That's the reason why low down payment. All right. So it says I'm going to briefly highlight options that you can. Okay. So I won't dive. So you can buy it for cash. You can buy a home for cash if you want. You can use hard money. Okay. What's hard money? Hard money is a privilege. Excuse me, a private loan. Oh, excuse me, a private lender who will loan you the money right away, but it will be at a higher interest rate and will be due in a year. which is risky. A hard money loan is kind of more for short-term loans. Okay, you really need the money, um, but it's somewhere in between private money and getting the money from the bank. Okay. Also, you have veteran loans where you don't have to put anything down. Okay, and the seller is willing to be the bank. Okay. You can also use self-directed IRA. If you have an IRA from an old company and you want to use that, you can use that as a self-directed IRA. All right. So use that to buy home also. And somebody that you know who has money to get the deal. You can also partner with somebody. So it says again, yeah, okay. I'm gonna skip that. So what type of property you want to buy? It says so as a beginner, you may want to get into buying buildings right away. Listen, that's an amazing goal, but to start out, um, that's a lot of risk, a lot of money you will be taking on. All right, so we want to reduce that risk by making your options as simple as possible. So most beginners what's going on here? Reading the files, taking usual, working on it. Uh, I don't know what this thing is doing to my PDF. It's a PDF, so would think it would have no problem with responding, but it doesn't seem like it's responding. Ah, that's killing me. Come on, don't do this to me. All right, don't do this to me. We were flowing, um, and it's still not responding. So I may have to shut this down and bring it back up. I'm actually going to keep this rolling. Um, but yeah, it's still not coming up for some reason. Darn. And that's the thing with these live tapings is that if something goes down like this, then you almost have to stop. And I really didn't want to stop. We were going for about a half an hour here, and um, and it's really not responding, which is crazy. Close the program. I'm just going to close the program, and we were on page 20. Um, so just go ahead and close the program and just kind of bring it back. And even though it's still not closing. Oh, this is crazy. Absolutely crazy. Oh wow. Okay. So what I'm gonna do is we're gonna stop here, okay? Because having technical difficulties. So we're gonna stop here, okay? And then we'll start on page 20 tomorrow, okay? So we'll start on page 20 and we'll kind of take it from there, y'all. All right, y'all. This is Colin Nathan Alim, the real estate boy. If you're looking to buy a home, sell a home, or invest in real estate, I got you.